Hello and welcome to India Market Open. It's Thursday and global equity markets are celebrating that there is no news is good news for now from the look of what the Fed has done. And good morning, guys. It seems like we might get a leg up, a little bit of a leg up this morning.
I think so. It's been, a good flow of news.
There is news, guys. There is news. Why is there no news?
No, there is news, but the news is that
I'll tell you what the news is. That my two co-anchors have decided to wear the dot plot on their ensemble today.
Yeah, I think you're getting a little dotty with age. But no, the big news, of course, this morning, all about the Fed. And when Samina says no news, she's right, because the interest rates haven't changed. But that was expected.
Quo, yeah.
That was expected. What's also stayed the same is the dot plot, which is I would say an amalgam of all the Fed members, the FOMC members' views, has once again reiterated after January that they see 3 rate cuts this year, totaling up to 75 bips. And that's what's really cheering the markets. Having said that, of course, they see inflation going up, they see the economy also growing up, and we'll go to all of that in detail. But overall, I would say good indicators.
No, fabulous. One, the dot plot, and two, Powell saying that it'll soon be appropriate to slow the pace of QT. That is such a big statement. I mean, in some sense, we've all been talking about how they have been reasonably hawkish, not too focused on growth as much as focused on inflation, but now coming out and saying that QT might be slowed for risk assets. I think it was music to the ears.
No, but let's just break this down, right? For people who, I mean, for a layman, cutting rates means the economy is not doing well. If the economy is
or inflation is under control,
or inflation may or may not be under control, because eventually if the economy is doing well, it would fuel inflation, for example, in India, right? This is where I think most people get perplexed. So the cheer should be that there are no rate cuts at all in life, because that really means that you're in a good place generally, right?
But you want Goldilocks, right? You want the porridge
Goldilocks
which is not too hot, not too cold.
No, also,
best case scenario.
And also from a risk asset perspective, I mean, one would love that the pace of hike has been so steep that for risk assets, valuation multiples to become a lot more reasonable, rate cuts are so welcome. So rate cuts happen, central banks are doing this. If QT is slowed down, all of that will fuel.
But I do feel like rates may remain elevated for longer than initially anticipated, more than likely. Of course, there was one article that I came across where they said the Fed, even if wants to stay neutral, they may not be able to, because their reputation now is at stake, because they've gone back and forth so much, and with elections around the corner in the US as well.
But if they're saying 3 rate cuts this year, you have to start them at some point from June. So that's all now in. All right. So
but the good news is it means very little for us, because our markets have largely been driven by domestic inflows. So
it's great from our markets perspective as well, right? Because everybody's saying if the Fed doesn't cut, how will Shaktikanta Das have the ammo to do so?
But we talked about this too. There could be one rate cut where Shaktikanta Das might have to do.
Yeah, but this is just favoring
the rate
it, right?
differential will eventually play out, because
So guys, let's get to the global news flows and then what happens today, and we're going to have a more detailed conversation with Jeff Dennis ahead on exactly this. What does this mean for our markets? Why this is important? Meanwhile, the bottom line, whatever Powell said, and of course, as usual, he's sort of hedged both versions. He's saying that I still want inflation to come down to 2%. The dot plot shows it might not, but the 3 rate cuts for this year has been reiterated. As a result, you've seen U.S. indices rally to close at all-time highs after the Fed meet. It's just a stupendous response in the U.S. markets that you saw across the board. So that has been the good one. Very quickly to take you through the highlights of what has happened, and we discussed a few of them, but I just put those in pointers. The Fed has decided to keep rates unchanged. It's reaffirmed 3 rate cuts this year. That's through the dot plot, or the SEP, which is actually the technical term. And because it's 75 bips, the implication is it will be 25 basis points each time round, possibly starting from June. That's what has been taken as a positive. On a bit of a, I wouldn't say concerning side, but also to balance that out, the fact is that the GDP forecast has increased from January to 2.1, which was 1.4. Now it's 2.1%. That means you have a hotter than expected growth. Point that Samina was making, that if you have hotter than expected growth, where is the rationale for cutting rates? Same with inflation. Core PCE is expected to go up as well, and the projection has also gone up, but by 0.2%. nevertheless, if there's a Goldilocks scenario that the Fed wants, this is probably the right point for it. And we'll play out in a bit what Powell is saying. But I want to quickly tell you what's happened to bonds. Nothing too much. It is benign. I would say the US 10-year has been benign at about 4.28%. So not too much movement there because on balance, everything sort of evens out. Crude's been okay. Crude saw, a bit of a downtrend, but then has come up again because inherently there are concerns as far as crude is concerned. So Brent was at about $86 a barrel. Asia has really at least started in celebration. And let's pull up and see what Asia is doing now. Nikkei completely was zooming about 1.5–2%. Look at the Hang Seng, 2.5% up. Let's quickly just look at the implied open as for India and see what it looks like for us. Are we also participating in the party? Yes, we are. By all indications as of now, we're joining that sort of post-Fed party this morning, and let's see if that pans out. Flows were nothing great to speak about. There was some FPI selling yesterday, evened out by domestic investors. So quickly, the fund flows before we go on to the trade setup for the day. But, that's going to be the big story where you do have, the FIs, DIs pretty much balancing each other out. Where you have Fed speak as the big indication.
And the yields coming off really helping the risk asset sentiment globally. So keep that in mind. 22,000 strike is now is where the maximum call open interest is centered at, and therefore, if the markets stay higher for over an hour or a couple of hours, and if there is some bit of covering here, then that might just help the market. So that's essentially the key point for the trade setup today, that from a setup perspective, it was the 22,000 call, strike call, which is the most important thing. And let's see if there is further covering out there. It's difficult to make a case for sustained gains due to valuation issues at the small cap and mid cap end of the market, you have to admit. But be that as it may, today could be a different kettle of fish altogether. And while people are talking about staying away from the commodity-linked stocks, so while crude has come off a little bit, but rubber prices have gone up, so watch out for tire companies. Don't go out and bet them because the quarterly numbers as they start coming out from April will not show good performance there. OMCs could be an interesting kettle of fish as well. But I think the stronger stocks which are impacted by price or policy cuts are now coming to the buying table. Yesterday we saw Nomura speak about it. Samina probably going to talk about the OMCs today, and we're going to talk about OMCs a bit later on with Probal saying as well. There's also a talk of MGL, I think, today, and we'll probably talk about that too. So anything which is strong but impacted quite viciously in the last 15-20 days because of price or policy action is now coming back to the table on the buying side. So watch out for that whole bucket.
Well, I think we were ripe for a bounce back, at least in yesterday's trade. It's gone home flat, which has been a bit of a relief. Volatile, though, nevertheless, like Niraj indicated. But, of course, with these very strong global cues coming in, it is setting ourselves up for a strong opening. If 21,900 gets respected and taken out, it could actually mean the next leg or the breakout of this consolidation phase for the Nifty. Well, I think, Niraj, what I want to quickly talk to you about is Bank Nifty. 9 straight days of a lower close on Bank Nifty. And I think that is the struggle. So if Bank Nifty doesn't pull through in today's day of trade, I'm not sure how far the Nifty can go from these levels. And I guess we've got to get that piece of the puzzle, right? That's one. And secondly, while you talked about risk assets rallying sharply post the Fed's meeting, gold, which is not a risk asset, has actually gone back to record highs. So I'm not sure what asset is not going up. Bitcoin is back to 67,000, so that's risk. You've got equities doing well. Crude, that usually is considered risk on, is actually eased off. And gold, which is a risk off, so it's usually a hedge, has also rallied quite sharply in trade. Remember, gold has an inverse relationship with interest rates. So if there are 3 rate cuts, gold traders would be long gold as long as there is no reduction in the number of rate cuts. So it's a mixed bag in every sense in terms of what we are picking up in terms of cues. But for now, a gap up on the street is what we are eyeing. Lots of pockets of interest. Whether or not this is sustainable is going to be anybody's guess. But I guess we'll cherish what we have for now on the street. Well, in terms of stocks, not too many stocks that are going to be driven by news flow, so smaller names in that sense. But one that we'll be tracking, and this was an exclusive by NDTV Profit. It's Wockhart's QIP. We've talked for the last few months about how they've talked about raising funds for the aggressive expansion plans, debt reduction. Finally, they've confirmed yesterday evening to the exchanges that they're launching a QIP of 570 crores. The QIP base issue of 350 crores with a green show option of 220 crores. The issue price is going to be 517 rupees a piece, which comes in at a 5.5% discount to yesterday's close. The equity dilution would be about 7.11 post this one. What you want to keep in mind is we don't know how this has got lapped up or what the response is going to be. 26 March is when they will be regrouping the management. But it'd be exciting to see how Wockhardt opens up. Remember, this was our exclusive and you heard it first on our channel. So no surprises there on Wockhardt's QIP, a big one there. Apart from that, railways seem to be having it quite well in terms of order wins. RVNL has emerged as the lowest bidder of Southeastern Railway project. The contract is valued quite big. It's 167 crores. The timeline for execution is 18 months. We will try and get a sense from the management in terms of the cash flow cycle on this order too. Well, we've also had one brokerage report, and I want to bring it up on IOC. Also, we will be talking to an OMC specialist later on in the show to get a sense of what's really happening, because up until 8 weeks ago, brokerages were upgrading their targets on OMCs, and now it seems that there are downgrades coming in fast. But Citi maintaining its target price on IOC. They've said that the sentiment has dampened by a cut in fuel price and an up move on crude prices, impacting the profitability of PSUs. But they did say that the price cut, remember, is temporary. OMCs are relatively well priced as compared to other public sector undertakings, and the recent price correction is actually a great opportunity for investors to go out and buy some of these OMCs. In order of preference, they like BPCL, HPCL, IOC and HPCL. So it's OMCs that continue to look good, and traders still not enjoying this for now, but I think for an investor, this space and this opportunity is actually a good time to go out and pick up some of those good OMCs at these prices after the recent correction.
Yeah, because the big, negative of rate cuts at the pump perhaps are behind us. So that there definitely could be a case, and we'll talk more about it. But just talking about another sector which might be in focus today, I think we should look at the IT stocks. Niraj's favorite, which he's been very, not right now bullish on, but I reckon IT stocks may have a good day today. You're likely to see that once the rate cuts have been underlined. And look at the dual combination. Fundamentally for IT, it's not bad at all. You're going to have an improvement in the economy, maybe better spends coming in from customers of our largest IT companies, and a benign interest rate scenario also helps. So I would look at some of those IT counters today, maybe.
Just a small interjection there. One, of course, we don't form our views, but remember, between yesterday and today as well, I know Samina was saying that how we've spoken about IT in slightly constructive fashion in the past, and yesterday we were talking about how there is very less room for an upside. But one of the pillars on which you can make a bear case for IT is that what if the rates would not be coming off, because that doesn't re-rate the valuation multiples for tech at large and IT services in India. If this were to happen, that changes at the margin some things. So therefore, some bit of upside because of that thing comes in, even if the demand commentary doesn't change. So I'm just making a case out here.
Are we of the opinion that a 25 basis point rate cut is going to increase demand and order wins for the IT sector?
No, the multiples for the space, for all tech stocks because of the interest rates, would definitely change.
So it's an investor sentiment as real business recovery,
right? Sentiment.
On the DCF, the valuation multiple.
Yeah.
On the DCF, the valuation multiple. So not a sentiment, but because of DCF.
I wouldn't say argument, but my pitch is that today, because of investor sentiment more than anything else,
the stocks might
you're going to see possibly a positive reaction, and then what you pick from there is, of course, the long-term view, and that's what's important.
And then we go back to Niraj's yesterday's
conversation. And then we go back to that, and we'll speak to all of our experts on it. But the other stock, and Samina spoke about railways, I'd just like to add Jupiter Wagon there. This is a space which went hot and then went cold, but the fact is that the order flows and the movement in this space is at breakneck speed, because you have governments planning 5-10 years ahead. So that doesn't change no matter what the stocks do. So having said that, Jupiter Wagons becomes the first Indian rolling stock manufacturer with its own wheel planey. So they have acquired something called Bonatrans India, at 271 crores, which manufactures rolling stock wheel sets with a production capacity of 20,000 wheels and 10,000 axles per annum. So this reduces costs and dependency of imported wheels. So if you look at it in the big picture, and I just want to zoom out on that for a second, you are trying to develop this Make in India next leg for export orientation, and Jupiter Wagons is setting itself up for that. So I would look at that. Sapphire Foods, the other one, and this is basically an NCLT approval, so maybe an overhang moving out of the way. They've approved scheme of merger of absorption of 2 players. That's GPPL, Gamma Pizza Craft Overseas Private, and Gamma Pizza Craft Private. These are distributors of Pizza Hut in Sri Lanka, essentially. So this was on the anvil, and NCLT has sort of cleared the decks for that. That might be a sentimental positive as well. More on my list, but after you're done, Niraj.
No, just the top 3 stocks on my radar, Samvardhana Motherson and KPIT. The reason I say this because amongst everything else, Japan export data came out and rose for the 3rd straight month, but predominantly led by autos. Japanese auto exports have surged to the US and the EU markets, and therefore suppliers or companies that work with Japanese auto companies could benefit from this. So let's see if there's a sentimental uptick there. Could be a positive for Samvardhana Motherson in particular, but some of the others related to that space as well. We're talking about brokerage notes. Jefferies on MGL is an interesting one. It's a buy. The target price has been raised to 1540 versus 1515 earlier, which is about a 22% upside for MGL from the current market price. Remember, we talk to the management tomorrow on India Market Open. They say that the stock has corrected 20% after the recent price cuts that they have taken. The margin impact of the price cuts, however, according to Jefferies, is cushioned by the decline in the feedstock cost. They expect margins to remain at the upper end of their FY 25-26 guidance. And they say, more importantly, that valuations are at close to less than 1 standard deviation or minus 1 standard deviation as per the long-term average, which presents an attractive opportunity to enter, which I believe is the case that both Citi and Nomura are making on OMCs as well, and Jefferies is now making on MGL. So watch out for that one. Lastly, very quickly, because I think we've Jeff Dennis up and a lot of other stocks to capture, but Citi on NMDC is an interesting one. They sell with the target price of 180 versus 215 earlier. They've opened a negative catalyst watch on NMDC because they believe that an iron ore price cut is imminent because domestic prices are more than 25% higher at a premium to the export parity, and 100 rupees per ton change in fines impacts the EBITDA by 4%. So if a price cut comes in, NMDC would correct. Let's see if NMDC sees a bit of a corrective move today.
Yeah, just 2 quick stocks, and this is not on back of news this morning, is Eicher Motors and Maruti, 2 that we'd want to watch out for in terms of today's trade as well. Both had a stellar performance in trade. Maruti, of course, made a new record high. Stock was up 15% in 2024. CLSA's come out with a pretty aggressive call on this one. It'd be interesting to see how the counter actually plays out in today's trade of trade. That's Maruti I'm talking about, if you can pull that one up. Eicher, on the other hand, was up 5.5%. UBS has anticipated a 34% upside, and the markets clearly got very excited on back of that. And you saw a 5.5% up move. Be good to see whether the gains continue into today's day of trade. But I'm assuming there was quite a bit of delivery activity on both these counters yesterday.
Yeah. And we had an interesting chat with Shashank Srivastava yesterday, which was really fun because it came at a time when JSW and MG were launching their EV, and they said, we want to be the Maruti of the EV space. So it was great to get Shashank Srivastava on that. And, you know, him talk about even if Maruti's EV plays in 2025, he doesn't think they're late to the party. Just a couple of more I would add, maybe Prince Pipes, if you want to look at. The company has signed an agreement with Klaus Warren Fixtures and NM Shah. They're going to purchase the Aquel brand and other assets. Not a huge sort of an acquisition, 55 crores, but greater value built in their bathware segment. And Prince Pipes has been definitely interesting. And then, of course, we have BNP Paribas on Bajaj Finance, where they've initiated coverage with a target price of 9,000.
9,000, guys.
Yeah, 9,040.
And Bajaj has had a good run.
Yeah, has started off very quickly. Now, just before we go to Fed, just wondering, Samina, any updates on Work Hard QIP? You mentioned about it, demand?
The book was full, so well subscribed, and I don't think that comes in as a surprise. Of course, we've confirmed that. So it came in at a 5% discount. Remember, the confirmation came in from the management yesterday, and we do believe that the book has been fully subscribed. So it'd be interesting to see a reaction on Work Hard this morning. The stock, remember, has been active. Mr. Korakiala has aggressively talked about their very ambitious plans, debt reduction being one of them, getting rid of non-core assets was something else that the company and management had indicated to us earlier. But do we have Jeff ready to join us? Yeah. Jeff Dennis, independent advisor, emerging market expert, joins in. Jeff, good morning. Thank you very much for joining us. Jeff, the three of us have been debating about, what and how to make of what happened last night. First up, I guess status quo, no changes on 3 rate cuts that's expected. Some may argue about the commentary being dovish, but what I want to understand from you, if the economy is doing well and inflation is sticky, how does the street or analyst or economist even expect a rate cut at this stage?
I couldn't agree more. I had expected that the Fed would go from 3 rate cuts to 2 rate cuts at this meeting. I'm very, very surprised they didn't do that. And I think it's inconsistent, frankly, with the rise in the increased forecast for GDP growth, which has gone up quite a bit since 3 months ago, and also a slightly higher inflation forecast. So I think it's very surprising that they still went for 3 rate cuts. And I think the market reaction will tell you the market was surprised as well. I don't know how they're going to fit 3 rate cuts in, because also you've got to consider the timing of the rate cuts vis-a-vis the election. The Fed will not want to start rate cuts just before the election or just after the election. So it does imply they're going to have to start thinking about cutting rates in June or July. And that still seems to me to be quite early. So I thought this was a big surprise today.
Jeff, I know global markets seem to be very excited, and I'm assuming it's the no news is good news in that sense. Wall Street went up 400 points. Asia looks good. Crude is doing well. Dollar is eased off. Bitcoin is rallying. I mean, risk on, risk off, everything's moving up. My concern is that if crude continues to stay elevated over the next couple of months, commodities are beginning to move up as well, given what's happening in China. Do you feel like 3 rate cuts today actually seem very unlikely for the rest of the calendar year, because there are going to be so many unknowns which are going to catch markets and regulators off guard?
Yeah, I agree. I think the key thing for me about inflation is that inflation is coming down. I focus more on the CPI. Inflation has got stuck, I should say, on the headline CPI just north of 3%. The core is coming down, but very, very slowly. Okay, the core PCE is lower for sure, but there's just not enough progress there towards the 2% level to justify 3 rate cuts. And then you are absolutely right. You bring in a really important factor here, that oil prices have now broken out of their recent trading range. It was a very tight trading range. And that's going to push inflation up, not just in the US, but of course around the world. So I think what the Fed is probably doing, they're saying they trust that the economy stays reasonably stable, does not accelerate or anything like that. It could, of course, slow down. And the progress on inflation continues. And therefore, you get your 3 rate cuts. But frankly, right now, as we sit here now at the end of March, the case for a rate cut in the US is very, very weak indeed. So I'm just very surprised. And you brought another factor in there to, if you like, underpin the surprise, and that is the rise in oil prices.
Jeff, good morning. Tamanna here. One of the reasons being talked about, and I wanted to get your take on this and why rate cuts are still on the horizon, despite, for example, you saying that the case for it is weak, is because you have elections in the US this year. The anticipation of rate cuts has grown, and high rate cuts are actually hurting people as well. And do you think this is why the likelihood of rate cuts is very much there? Maybe once they start, it won't be a quick reversal, of stance, but definitely 75 basis point cut is coming in.
Well, I published something earlier in the week where I said if you look at the election calendar, and bizarrely, the November FOMC actually begins on the day of the election and finishes the day after. I think if you assume the Fed will not want to start cutting rates the meeting before the election and will also not want to start cutting rates the meeting after the election, because one move would upset one side and the other move would upset the other side. My best bet is they would have to start cutting rates in July, and then maybe they cut in November or December. But the politics makes this more complicated. And the politics, for me, makes this decision still about three rate cuts very difficult to justify, frankly. Higher rates are hurting in certain parts of the economy. You're seeing a big increase now. Don't know about a big increase. You're seeing some sort of increase in credit card delinquencies. Obviously, with bond yields having moved back above 4.3 to 4.35 recently, although they've come down on the back of the Fed's meeting today, that is still holding the housing market back a little bit. But if you look at what the Fed has been talking about and their goals, and you look at how decent the economy is, it's just hard for me to see that the monetary policy outlook isn't changed from what it was 3 months ago. And specifically, I'm not sure how they get 3 rate cuts in, given their goals between now and the end of the year, given also the handicap to their flexibility that exists because of the election. Sorry.
I mean, having said that, there is no compulsion on the Fed to stick to 3 rate cuts, this year. This is an inference from the dot plot. The Fed has always said that they will watch the data and see what's happening next. Just want to understand from you, Jeff, implications for emerging markets such as India.
Very, very good. I think it's been a pretty dull year for emerging markets. We're just above the zero line. One of the things that's helping emerging markets to come back from being down about 5 or 6% earlier in the year is China has stopped falling, and that's helpful. You're seeing some big sell-offs in certain other markets, like mainly in Latin America. But you've seen some very strong markets like Taiwan, for example. Now, India is outperforming this year. It's up slightly in dollar-adjusted terms, which is good. Based on my outlook for monetary policy and my outlook for the economy and inflation, I think EM puts on about 10% on the year, and we're up now somewhere between 1.5% and 2%. So this was a good day for EM because you're getting the classic signs that pull people back into EM: a weaker dollar, lower bond yields, risk assets doing well in the US. So I think all of this is good for the emerging markets. I still think India outperforms. I don't worry about the election with respect to the Indian market because I think we know probably what the outcome will be. As I've said many times on this show, I think the issue for India is always valuations. You need the growth to come through. You need the earnings growth to come through. You need to know that the inflation story is improving a little bit more. But at the end of the day, India looks better to me than China, and India looks to me like a small overweight. And I think this news today is very, very good for emerging markets.
Here, good evening to you. Just one question, really. Assuming that the Fed does what you're saying that might be difficult, which is 3 cuts, plus the comment about QT as well coming in from Jerome Powell, would you believe that risk assets would be higher between now and the end of the year if both of those things happen?
Yes, for sure. In other words, you're not going to get many days like you've had today, but the general theme will be. In other words, I've been saying to people that even if they ended up cutting the number of rate cuts in their plan or in their dot plot from 3 to 2, the narrative has not changed or will not change. That narrative is rates are at their peak, the economy's doing okay, inflation's coming down, heading towards 2%, albeit a little bit more slowly than we'd like to see. And ultimately, we don't really know when, but ultimately, they will slow down on the QT process and stop the QT process. I think if you assume with that, if you assume as I do, that the dollar is overvalued and after being pretty resilient so far this year, starts to come off and you do see slightly lower bond yields, that is what I think gives you higher risk assets between now and the end of the year. And that will include EM. And this is why I'm very happy with my 10% call on emerging market equities in 2024.
We love having you, Jeff Dennis. Your views on the Fed and the resultant impact on EMs always help. Thanks so much for taking the time out and staying up for us. That's the view from Jeff Dennis. Tracked emerging markets as closely as anybody on the Western side and believes that EMs and India could be a good take on the back of this policy and even otherwise. Well, the implied open looks okay. As we head into the break, while you've heard all about what the Fed implications are, hear out Jerome Powell as well, as he maintained the dovish stance on the rate cuts amidst a strong labor market.
I mean, we saw, you saw last year, very strong hiring and inflation coming down quickly. We now have a better sense that a big part of that was supply side healing, particularly with growth in the labor force. So in and of itself, strong job growth is not a reason, for us to be concerned about inflation.
Back with India Market Open right here on NDTV Profit. A quick look at the implied Nifty and show you how much higher are we likely to start off very strongly. So whether it's 120 points, 150 or 180 points, the point remains that on the back of what the US markets have done and the Asian markets have done this morning, we are likely to start off positively. The question is, what can we do from there on? Agam Vakil joins to give us the derivative setup. And Agam, I was looking at the call put options as well. Significant concentrations at select strikes, which if the market stays higher, might come in for a bit of short covering, you think?
Actually, short covering is due, Niraj, because from what we see, despite the fact that the sentiment has been, well, not necessarily bearish, the Bank Nifty specifically has had the worst run in 20 years. That decline that we've seen of late. So yes, the question really is that whether or not we can in fact see that short covering coming through. Of course, the Nifty yesterday was flattish and it closed marginally higher, and of course we saw unwinding in futures, and the Bank Nifty is where we saw a little bit more addition in open interest towards what it seemed like shorts. But as I've been mentioning, that we've just been seeing that ever so slight gradual decline on the Bank Nifty, and this losing streak has been the longest in the last 20 years. So that's something that to keep an eye on. It doesn't really mean anything, because this losing streak hasn't really lost substantially as far as the Bank Nifty is concerned. But let's move on and talk about the options market. Naturally, the Nifty will be in focus because of the weekly options expiry. And yesterday we saw a lot of writing in terms of calls when it comes to the 22-100 and 22-200 strikes. And we saw a lot of unwinding in puts as well, even as the Nifty moved downwards ever so slightly. But 22,000 is where we are keeping an eye on. So let's bring up the overall open interest, and you continue to see the 22,000 call as the one with the max OI, and that perhaps will be around the region where we could see some amount of volatility take place, because that in the near term acts as some sort of a key level. Moving on, let's also talk about stocks, and the auto pack was in focus. A lot of impetus there on the back of Eicher Motors and Maruti Suzuki, looking at longs building in along with SRF, which also saw longs, and a short covering for Indus Tower, Exide, as well as Vedanta and AU Small Finance Bank. So keep an eye on these levels. But let's get in an expert opinion here. We have Soni Patnaik of GM Financial who's joining us on the show. Soni, good morning. Thank you for joining us. Let's start, as usual, with your view on the benchmarks. How are you trading them?
Hey, good morning, Niraj, and good morning, Agam. Thank you so much for having me on the show. I think what GIFT Nifty is trying to imply that, we'll be opening right somewhere near the congestion area, which is 21,950, 22,000. You can see a lot of call writing that is still present in 22,000. There was a significant change in open interest. Maybe, it's wise just to watch the first 15 minutes to half an hour and to see whether the gap up is getting sustained, whether Nifty is trying to sustain above 22,000, which is your congestion area. So I think that will depend a lot. Right now, we can say that the support is at 21,700, but the expiry range is indicating somewhere between 21,750 to 22,050 on the higher side. So I think it will be important to watch how it can sustain. And going forward, 22,200 remains the very crucial resistance level, only above which we can see a trend reversal back again, or which Nifty can test new all-time highs again. So I think these are the crucial levels to watch for Nifty. When it comes to Bank Nifty, 46,000, strong support, closing was around it. So I think not to panic a lot about Bank Nifty. Maybe it can support Nifty going forward. There's a resistance around 47,200, 47,500 for Bank Nifty. So I think these are the two crucial resistances to watch out for. If Bank Nifty is able to take out these resistances, then good enough. I think Bank Nifty can head towards 48,000 also in the coming while. I think, maybe a lot of focus can be on Bank Nifty today and a bit on IT stocks as well, just to watch how they react.
Okay, fair enough. Soni, in that case, let's talk about stocks then. And I believe the first one on your radar is ONGC. Can you take us through that one?
Right, so ONGC, after a sizable correction, it's trying to reverse back with a good support from 260 to 58 levels. And it has even closed very comfortably above 260, which is an option chain breakout. So the strategy here is to buy a call option of 270. to buy it in the range of 2.1 to 1.8, keep a stop loss of 0.5 and a target of 5 to 6 points in premium. The view for ONGC is that it can test 270, 275 by March expiry. So that's the reason why the safest call option to bet on right now is with 270 call option. And the second strategy is for Sun Pharma 1560 call option. We can buy that in the range of 11 to 12. Keeping a stop loss of 16 and a target of 22. So Sun Pharma has taken very good support from 1530, 1520 levels, which is also its option chain, good support. So going forward, there's a resistance of 1560. If it's able to cross that level today, you can see a good short covering and short of Sun Pharma towards 1590, 1600 levels as well.
All right. Sure, Soni. And the other one, I believe, on your radar is Sun Pharma.
Right, so I think I just covered that.
Pardon me, yes. Well, okay, fair enough, Soni. Well, in that case, thank you so much for joining us and taking us through your views on the markets, as well as giving us a couple of ideas. Well, with that, it's over to you, Tamanna.
All right, thank you for that, Agam. It's going to be an exciting day because at least for now, Jerome Powell has kept hopes of a rate cut or 3 rate cuts this year alive. Let's begin with commentary from Nirav Shah, Head Equity Research Analyst at Manharlal. Nirav, very good morning to you. Great to have you back here on NDTV Profit. We've seen Asian markets respond very positively. Is it likely that this is exactly the sentimental positive booster dose that the Indian markets needed?
Yeah, good morning and thank you for having me on the show. I think this could be a kind of a perfect situation for the markets. We have had a correction in the markets, and it was a pretty much kind of a calibrated kind of a correction which we saw in the markets. And markets, of course, were waiting for the global cues, the global commentary from the Fed. And now with the Fed having re-performed the 3 rate cuts, I think it's likely to boost the sentiment as far as investments and risk appetite is concerned. So I think the risky assets definitely are going to get a boost from this. And predominantly, I think the IT sector is likely to benefit from these developments. We've seen the IT sector being under some sort of pressure, but I think we are likely to see some revival over there, and more so in the mid-cap IT space, we expect stocks to start moving. Bank Nifty will be an important factor to watch out for. We expect Bank Nifty also to start inching upwards in trade.
What do you expect in terms of sector-specific response, Nirav? On the one hand, of course, you'll have this, like we said, a sentimental booster dose. So maybe pockets that have been suffering a bit last few sessions may see an up move, but we've been talking about financials and tech since morning. Do you reckon that you will see a constructive sentiment there as well?
Yeah, so as we already discussed about IT and banking, I think going sector-wise, I think we've seen a kind of a very different kind of performance from different sectors. For example, I think starting off with the auto space, I think it's been a kind of a flawless performance from the auto sector. Month on month, I think we've seen very good data points. And even in a tough market, we've seen two-wheeler stocks continue to do very well. We've seen good re-ratings happening over there. Yesterday, I think the positive upgrades which we saw on Eicher Motors and Maruti, I think they augur extremely well for the auto sector. In banking, I think the struggle still continues. I think it will be quite some time before we start seeing signs of confidence over there. Capital goods continues to do very well in trade. We've seen pharma under some sort of pressure of late, but overall still it continues to do well. And FMCG too has been struggling in trade. I think we've seen HUL at a 2-year low, and at the same time we've seen stocks like Nestle and Colgate continue to perform quite well. So it's a kind of a divergent performance which we are seeing in the markets. Some infra stocks, the overall infra space, I would say, is doing well on the back of strong order books. But at the same time, the valuation support is still not there because most of that is factored into the price.
Okay. Well, Nirav, stay on, so much more to talk about. Let's shift focus to some key stocks, which are the newsmakers today. It's probably not a very big list, but Mihika joins in with some of those at least. Mihika, good morning.
Good morning, Niraj. So yes, at first we have Torrent Power, which has entered a share purchase agreement and is going to acquire 100% equity stake in Solapur Transmission, which and Power Finance Corporation is selling this. Now the acquisition supports the focus area of the business in the transmission business. And Solapur Transmission is to establish a transmission system for the power evacuation of the renewable energy projects in Solapur Special Economic Zone in Maharashtra, which is to the tune of 1,500 megawatts, and shares were acquired at a face value of rupees 10. Then we have Aeroflex Industries, which has increased its capacity, finished its phase 1 expansion, and its capacity now stands at 15.5 million meters per annum versus 12.5 million meters as of Q3. Now they're also going to start the phase 2 of expansion, which will increase their capacity to 16.5 million meters per annum, and this is expected to be completed by December 2024. And the company is going to invest 39 crores, and this will be funded via internal accruals. And lastly, we have TVS Motors, where the board has approved the allotment of cumulative non-convertible redeemable preference shares, and now the issuance of the shares will be via a bonus. So the 4 non-convertible preference shares will be allotted at a face value of rupees 10 to every 1 equity held by the shareholder as on the record date, which will be released later. Now the issue price is at rupees 10 at a coupon rate of 6%, and the aggregate values of all the preference shares that will be issued is 1,900 crores. Redemption will be after 12 months, and they will issue it on the approval of the NCLT, and they're going to use their general reserves for the capitalization. And as of Q3, their general reserves stood at 7,574 crores.
Okay, interesting. Thanks a lot for that, Mihika. And interesting because, for example, Aeroflex, a company that came in with a lot of fanfare, massive subscription, got heavily subscribed, went up, I think, all the way to 180 or 190, currently at 125, just shows that even with companies which had got strong subscription and good fundamentals, they have been pulled back. Nirav, any thoughts on Aeroflex? I mean, interesting development right now, but a business that got heavy subscription during its IPO.
Yeah, so I think there was a lot of euphoria and fanfare at the time of the IPO on account of certain very influential investors having being involved with the company. I think if I'm not wrong, the IPO price was close to around 108 rupees. And we had a very strong listing, after which things have cooled off a bit. And I think the price has come down, and I think it's really a good opportunity to start nibbling into the stock. I think we have to see the quarterly results also, but I think this seems to be an ideal opportunity to start having a look at the stock in a serious way. And of course, why just Aeroflex? There are a whole host of mid-cap companies which are looking very attractive at the current levels. Yesterday, I think a case in point would be LT Foods, where we have seen 1% stake being picked up by another influential investor. So there are a whole host of such opportunities in the market.
Shrikant, Chouhan as well joins in to talk to us about the technical setup and, of course, what the markets are indicating. Shrikant, what does it look like? I mean, a big gap up is what we're expecting in today's day of trade. But it doesn't seem like these global cues could, replace the nervousness that our street has been feeling for the last couple of weeks now. What do you feel about the index at this stage, keeping in mind the global context and local news flow as well?
Yeah, good morning, everyone. I think, the market was correcting and it was down mainly because of domestic as well as global concerns. But I think after this particular specific meeting, Fed's meeting, now the market has completed its correction. We can see one more pullback from lower levels because the fall was quite deep. From the levels of 22,500, we saw the levels of 21,700, and there was hardly any recovery. But after this particular event, I'm expecting now the market should start pull back to the recent sell-off. It has completed its correction, but in case if we see the market is again dropping below the levels of 21,800, then we can expect furthermore weakness in the market. Otherwise, I am of the view that the market is now moving towards 22,200 or 250. So if there is any long position, or if someone is like really interested in taking any specific buy call on the market, then 21,800 should be the final stop loss on a closing basis. For the Bank Nifty, the formation is equally similar. It is much more resilient as compared to Nifty. 45,900 should be the final stop loss on a closing basis. Again, we can expect 47,000 on the higher side. So broadly, I am of the view that from here onward, I think for next few days, we are going to see pullback in the market.
So if you do get a gap up, Shrikant, this morning closer to 21,950, 970, traders could be recommended to initiate longs. And where would the take profit level be on the upside? 22,200 becomes important to take profits?
Yeah, absolutely. Like even if we see the market is opening somewhere close to 22,000 levels, then also we should look for adding some position. Intraday correction, if there is any, then I think that will be an opportunity to add more. 21,800 should be the final stop loss. On immediate basis, as you mentioned, yes, 22,050 will act as resistance. And in the best case scenario, 22,200 or 250.
What about the ideas for the morning?
Yeah, good morning, Niraj.
Very good morning.
I would like to go with Tata Steel, which is currently trading around 145, 146, and the pattern of the stock is like showing a lot of strength. In fact, if we see the pattern of last 10 days, then it is trading within the broader trading range of 15%, which is unusual. That means something is happening in the stock. And whenever the stock is falling to the levels of 145, 140, we see some recovery in the market. At the same time, we cannot forget that this is integrated player, and iron ore prices have again started moving upward after hitting the levels of 97, 98. So I think what I can see on the chart is that the stock is again hitting for the levels of 155, 157 on immediate basis. And I think the stop loss level is also very close by. So 142 should be the final stop loss for creating any long positions on Tata Steel. We also like Tata Communications, which is around 1875 or 1890. Here also I am expecting stock to move towards 1950, 1975 on immediate basis. I'm going to say in next 1 or 2 days of time, and we can keep stop loss at 1850 for the same.
Very interesting. Tata Steel and Tata Com. The entire Tata pack has really been suffering the hangover.
I'll just tell you, every show closing,
Tata Investments.
Tamanna makes it a point of highlighting, Tata Group stocks have gone up. No, you're right. But I'm just saying.
Which is why, look at Shrikant.
The way Samina is obsessed about Tata Investments move, price move. You highlight.
You're not too far behind on Tata Chemical, just FYI.
The last several sessions you've been...
No, you're not wrong, Baba. I'm just bringing it up.
And I'm just wondering...
We're close watchers.
Why so much punishment for something that they did not do to themselves?
Point well taken.
Nor did they say we're bringing an IPO, nor did they say we're not bringing an IPO. The market has just decided, and those stocks are suffering. But Shrikant, 2 picks today are both Tata Group picks. I've really found that interesting. But another stock, definitely, that is on our radar is Bajaj Finance. Interesting note out this morning from BNP Paribas. Harsh joins with more details.
Well, absolutely, very, very interesting. A 35% plus upside given by BNP Paribas to current market price. And this is after the stock has gone up maybe 4-5% from the month's low that we saw. So what BNP Paribas seems to be suggesting is with regard to growth, there is absolutely no concern. They also believe that Bajaj Finance is well placed from a perspective that they cater to the more affluent Indian. And as there is a remarkable shift in terms of demography and more affluent people start to come into the funnel of Bajaj Finance, so to say, it should only benefit from this shift in demography that India will go through. They are therefore expecting growth to be in the late 20s all the way till 2030. So extremely strong growth that they are continuing to expect on a very high base. Mind you, Bajaj Finance has grown 30% plus in all 3 quarters of this current financial year on a year-on-year basis, of course. They're expecting that kind of a trajectory, late 20s kind of growth to continue. They're also suggesting in the near term with regard to some asset quality issues, especially in unsecured, they're saying that that's below the 50,000 kind of ticket size, and they believe that this should not be a threat to growth for Bajaj Finance, even if this were to continue. And therefore, growth will remain as is. They're therefore penciling in, current valuations are at roughly 4.4 times FY25 price to book, which they believe are reasonable. And given historical levels, they are reasonable. They are expecting a 5 times price to book value, roughly. FY26, 9,040 is the target price.
Right, Harsh, there with this BNB Paribas note, which is, I mean, quite, I would say, optimistic on Bajaj Finance. Keen to know Shrikant's views on whether you see that kind of an upside on the charts, or is this really, you know, the rosy picture that perhaps this note is saying?
I think, say, like, Tamanna, at this level, the stock is quite attractive. The reason is because it was around 8,000 levels. From there, all the way it fell to the levels of 6,100, 6,500. And even if we go through with its fundamental, asset quality is like stable. Also, the company is delivering what 30% sort of net interest income, which is like something really robust. So I'm of the view that fundamentally, certainly, it is very attractive at these levels. Technically, also, the stock is showing divergence, positive divergence. What it means that it is going to shift its previous trend, which was falling. So based on it, I am expecting stock to move towards at least 7,200 in the near term. But in the best case scenario, we may see the levels of 7,800, 7,850, which is also our fundamental target. Okay.
Well, that's the long and short of the initial set of stocks that you need to monitor. Stay on, Shrikant and Nirav. We'll be right back. We head into a break. As we head into the break, we highlight the biggest story of the last 10 hours, or 8 hours, if you will, which is Fed Chair Jerome Powell's reiterating that he expects interest rates to start coming down later this year, but is not ready yet to say when.
As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are coming into better balance. We believe that our policy rate is likely at its peak for this tightening cycle, and that if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate.
back. Less than 2 minutes to go for pre-open rates to hit, and we're looking like we're set for a good start at least today. Will it sustain is another question, and whether we will see sort of selling pressures as some of those prices come up. But one sector that I want to focus on this morning is autos, because Eicher and Maruti were the stars of the day yesterday. A lot of I would say in Eicher's case, a brokerage note, in Maruti's case, fundamental reasons as well. But Nirav, let me start with you. What do you make of a Maruti, and what do you like in the auto space? Do you think that there is a turn coming in?
Yeah, so as we pointed out that I think Maruti continues to maintain the leadership in the CNG segment, and is likely to do so, at least in the foreseeable future. And the product mix has also been changing, and it's been more favorable towards the SUVs. So the overall realizations have been going up. The margin trajectory has been improving. And overall, I think the outlook is improving as far as Maruti is concerned. As far as Eicher is concerned, then I think we are seeing them maintain their leadership position in the premium segment. And Bajaj Auto also, on account of the buyback related announcements, etc., has been doing quite well. So I think the overall picture as far as the auto segment continues to be strong. Why just the larger players? We also have smaller players like SML Isuzu and Force Motors, which have been doing quite well. For example, Force Motors, they've indicated that all the three segments, whether it is a school segment, or whether it is the employee travel, or whether it is the tours and travels, all these segments have been firing quite well. Their components business has been doing quite well. Their engine business has been doing quite well. So overall, across the board, I think whether it is the larger players, whether it is the smaller players, or whether it is the auto ancillaries, especially those which are going to supply to the EV space, they have been doing quite well in trade. So overall, we like this space in the medium term.
What about you, Eicher and Maruti? Yesterday, both of them made, for the big gainers on big volumes. Further upside expected. And if you missed the rally yesterday, do they still look good for fresh entry at these levels?
Yeah. For Maruti, yes, we are specifically bullish based on its technical formation. The reason is because after crossing the multi-year resistance of 9900 in the month of September 2023, we saw a sustained rally in the stock. And whenever there is a multiple resistance breakout we see in any particular stock, after that we saw a long stretched rally. So based on its technical formation, we are expecting stock to move towards 14,000 in next maybe few weeks or months. So it will take some time. But broadly, we are of the view that the stock is heading for 14,000 based on its technical formation. And in case if there is any correction, then certainly we should look for adding positions at current levels, even on dips close to 11,900 or 850. But for Eicher, the stock is holding well above the important level of 3,700, 3,800. Based on its near-term overall volume-based activity, we are of the view that the stock is heading for at least 4,200. And the entire space, auto, is also doing well. So I think, yes, Eicher as well as Maruti both looks good at current level.
Okay. Well, auto is right up there. Remember, today we'll watch out for some of the auto ancillaries. I wonder how is Samvardhana or Samil really, Samvardhana Motherson trading in the first. Actually, it's just the first 2 minutes, so we'll give these stocks a chance to settle. But let's see if some of the auto anchs have a good run. What had a very good run yesterday was Praj Industries, was up about 10% in trade. No apparent reason. I couldn't figure out a news flow element which would have gotten this. But the stock was up and about in trade yesterday. Shrikant, you notice any kind of breakout move on the charts or anything specific? We'll ask Nirav the fundamentals as well, but technicals for Praj?
Yeah, I think Niraj, technically the stock completed its corrective pattern somewhere close to 480 because the stock corrected to 50% of its entire rally that we saw from the levels of 300 to almost 600, 650. So around 475, 450, the stock has formed its base building sort of formation. And after this particular volume-based activity, I am of the view that the stock is again started its pullback to the recent sell-off from the 650 to almost 450, 475. So we can see the levels of 550 or 560 in next maybe few weeks. So yes, it's a buy at current levels, and I think the pattern has shifted from bearish to I can say bullish.
A lot of rumors surrounding Brij around some corporate activity. So bear that in mind. But Nirav, fundamentally, Brij Industries, big 10% candle yesterday, worth investing, or you would find better opportunities?
Definitely like to have a look at it because it's a niche company, and I think ethanol related equipment maker, and they are into biogas. They are working on compressed biogas related projects and a lot of innovative projects relating to bagasse, etc. So it's a very niche and an innovative company, and they've got a very, very strong order book also. And I think this stock ran into trouble when we had these ethanol-related developments, announcements which came. And I think as they say that form is temporary, but class is permanent. So I think that would apply to this company. And I think we are seeing a pullback in the stock. And definitely we expect the stock to rally from the current levels.
That's Brij Industries. Shrikant, very quickly, I don't know whether you talked about Tata Chemicals, but after that 8% fall yesterday, would you bet on an intraday pullback on the stock if you get a flat start? Shrikant, we can't hear you. Yes.
Yes. Achha, you are asking about Tata Chemical, right?
Yes.
Yeah, I think, the stock fallen to its 50 as well as 100-day simple moving average, despite the stellar rally that we saw from the levels of almost 900 to 1350. So I think at these levels, again, it is attractive for those who are like positional traders or investors in the market. With a very short-term view, it is very difficult to say because the stock can continue its correction maybe up to 1000 or 950, which is again almost 5% lower from current levels. But if there is a medium to long-term view, then certainly it's a buy because this particular level, most of the time acting as support level for the stock. And whenever there is a rally in the market or in the particular Tata Group stocks, we see rally minimum up to 1150 or 1200. So at these levels, the risk reward ratio is quite favorable for positional traders.
Nirav, do you agree? I mean, soda ash prices have only seemed to be moving one way, which is down. Tata Chemicals, of course, gained on back of that Spark report. Fundamentally, enough reason for one to look at the current price as an entry point on Tata Chemicals, or it's an avoid for now?
I think I would like to be cautious on the stock and avoid the stock for the time being. Wait for the quarterly results and the commentary from the company to have a better understanding and then take a position in the stock.
A quick look at your top brokerages this morning. Harsh is joining us on this segment that we do every day. He's curated the top brokerage notes that you should watch out for, might have impact. Harsh, what's on your list?
Well, yes, absolutely. First off, let me start off with MGL. Jeffrey's bullish call on MGL, target price 1540. They've upped their target price from 1515, so it's a 22% upside from here. What they're suggesting is post the 20% correction, MGL looks poised with regard to a possible value buy. They're looking at a margin impact due to the price cut, but they believe that margin impact will be limited, will be softer because they are expecting feedstock costs to decline as well, and therefore they believe that margins will remain at the upper end of the management guidance. They are also expecting EVs to not make a big dent into the gas and the CNG demand, and therefore they believe that demand will continue to be robust. Also, the acquisition of Unison, they believe that one is volume accretive and will create value for MGL, and that's also another positive. They're expecting an earnings CAGR of 14% on this one going forward for the next 2 to 3 years. Dividend yield of 3 to 4% also they believe is quite lucrative, and therefore they believe the risk reward at this point for MGL is favorable. The other one that Investec is looking at, in fact, is BSC. Target price 2,800 on this one, 40+% upside. They are expecting that the strong print with regard to option volumes will continue on the BSE. The margin miss in Q3 they believe is largely because of one-off. 91 odd crore expenditure was a one-off in Q3, and they believe that that may just reverse given that it was relating to Forex, and Forex seems to have declined a little bit in Q4. So they believe that margin stability will be brought through Q4 onwards. And some guidance around that is awaited in Q4 as well. And they believe that that better clarity and better stability should aid the BSE stock. Currently trading at roughly 24 times. They are expecting a potential 40 to 45% EPS CAGR all the way to FY26. Target price 2,800.
2,800. Today's a day for stiff targets, I must say, Harsh. You brought out Bajaj Finance target of 9,000 odd, brought out BSE 2,800 odd. Pretty interesting, some of the moves there. But thanks, Harsh, for bringing us that.
Do I sense a hint of skepticism in some of these targets, Niraj? Because, I mean, so the brokerages, I mean, it is always a incentive to have good targets, and it's attractive to investors
and to be able to justify them as well. So yeah,
I mean, who's catching anyone's neck if they don't hit it? Think about it. So
I mean, the clients would probably, but the limited point is on a Bajaj Finance, a 9,000 in a year seems to be very stiff. For that, the market just needs to do really well for BAF to be able to do this, right?
Tamanna, nobody's stopping them for coming back in a few months and revising the target price. So nothing stands and nothing stays.
So there is no huge stiff penalty for getting it wrong. Having said that, we're not claiming that these are wrong.
Yeah. I mean, BSE is already up 2.5% in pre-open.
Shrikant, any take on BSE?
Still, for BSE, it is really tough to say anything because the stock is very close to its overextended trading range, and there is hardly any correction. But from the gas space, oil and gas space, we like Gujarat Gas, which is currently down, but at the same time, it is very close to its important support levels. And I think if there is a medium to long-term view, then certainly we should look for adding Gujarat Gas to the positional portfolio. I'm expecting downside is very much limited for the stock, but at the same time, if there is any pullback, then the stock can easily come back to the levels of 600. So currently it is available at 100 days, 200 days simple moving average, which is a very good entry point for those who like mid-cap stocks to buy and hold.
So Gujarat Gas is definitely a pick. Shrikant, of any of these, RVNL in the news today, Jupiter in the news today, any of the rail stocks that you would buy right now?
Yeah, I think, all these railway stocks, they are showing some signs of stability. Although there is hardly any recovery even after hitting the important supports. But we like stocks like Railtail, which is currently around 349, 350. The stock is into corrective mode, and I am of the view that the stock is on the verge of forming higher bottom. So at current levels, it's a candidate, and is a very decent candidate to buy and hold with a target of at least 420, 430 on the higher side. We also like RITES, which is around 630, 635. And the stock has completed its correction by hitting the 50-day simple moving average and 100-day simple moving average. So again, it's a good entry point for buy and hold. In case if there is any pullback, then the stock can easily move towards 750 or 760, where it has next leg of resistance. So these two stocks are really good to buy and hold.
Okay, there's from amongst brokerage nodes, Gujarat Gas is one stock, Bajaj Finance is other. There is also an HSBC upgrade on Cummins, and Cummins target price is 3,300. The stock has opened up higher. Nirav, any thoughts on Cummins India?
Yeah, I think it's due for an upgrade basically because we have the the new pollution norms, the CPCB norms, what we call, the sixth phase of that. And I think that is likely to boost the demand for Cummins products. So I think the commentary which has been sent out by the company has also been quite encouraging. So I think can expect an up move from the current levels as far as the Cummins compressor related business is concerned.
So, another stock very quickly. We spoke about BSE. Nirav, keen to know your views on BSE and MOSL as well. There's an MK note on MOSL. Another exciting target price. How do you see this entire play, because it's based on the enthusiasm in the capital markets fundamentally?
So I think BSE pedigree stocks, I think there's always going to be a scarcity premium. So that is one factor which is going to influence the markets. So I think always such type of stocks are going to be in demand. So that is one factor. And at the same time, I think MOSL continues to do well because markets generally have been doing well. So I think enjoy the party. That's what one can say.
Okay, enjoy the party. Just bring up the stock price of Wockhardt out here on the screen before we go to our market open. But Wockhardt should come up on your screen. Remember, a few days back, NDTV Profit broke this exclusive piece of news that Wockhardt is going to come out with a QIP. The price will come up on your screen. It's up 4%, which suggests that despite the fact that the floor price of the QIP was 5% lower than the price yesterday. No, let's just stick to that, please. Despite the fact that the floor price of the QIPs was 5% lower than the current market price or other closing price yesterday, the stock is up 4% today, which means that the demand for the QIP has been strong. So pretty good going for Wockhardt, and something that we'll talk to both Nirav and Shrikant post-market open. But about 9 seconds left for the markets to kickstart trade. So let's focus on what the Nifty does this morning. We'll also try and, of course, see if IT stocks lead the charge higher. So that will be the other interesting piece to watch out for. But here's how the markets are starting off this morning. In the green, 170 points as per the implied open, 22,000. Remember, there's a key level. There's a lot of call concentration here. If the markets stay convincingly higher, if they do, then there might be a case for short covering as well. Mid caps and small caps as well as Nifty IT should come up on your screen. And let's see what those indices are doing. Mid caps 1.28% higher, small caps 1.37% higher. Strong show by the broader markets. They were beaten down also badly, and Nifty IT is doing better than the Nifty. That's the key point. Look at the differentiation, 0.74 versus 1.15. Bring up the heat map and let's see if IT stocks are right at the top of the pile or no. Well, metals are and OMCs are. So Tata Steel 2.5% higher. Remember, commodities across the world have inched up. Precious metals, non-precious, everything has gone up. BPCL continuing from yesterday's up move. Today there is an upgrade on IOC by Citi as well. But it's metals first up and then IT. So Wipro, LTI, HCL Tech, all of them higher. So, well, good spotting by Tamanna on the trade setup, because these are the stocks that are actually leading the charge when it comes to the weightages. Not too many losers. That's the other key point to notice in the session today. Well, Metallica with a bit of tech twang. That's how the Nifty 50 Open seems to be today.
Well, whatever it is, it's music to the ears.
You bet.
On a day when the market's looking very, very good, and thanks to Powell G this morning. So we're having a good day, no issues. Broader markets also doing very well. Specific stocks that we've been talking about since morning. So let's pull up and see how they're doing on opening. Rail Vikas Nigam, lowest bidder for a railway project for Southeastern Railways this morning, 3.5% up. Jupiter Wagons has made an interesting acquisition. They're buying something called Bonotrans India, which makes wheels, about 3% up. RateGain has bagged a big order. It's selected for SaaS solutions for travel and hospitality. US-based company, again 3% up. Not really in the rail stock focus category, but yeah, RateGain's doing well. Polycab, I wanted to see what happened, because this was some news flow which came in that they were the target of a ransomware attack. Has not made any difference right now. 1% up. Patanjali has been seeing a negative news flow. They've gone to court and apologized for their misleading ads. They've been summoned to court. Doesn't matter today, 1% up. The mood is good. The mood is good is what I would say. Mahanagar Gas, good note by Jeffries with a target price of 1540. Just about 0.5% up. That stock has also seen quite a bit of run up. Aarti Drugs again had, I would say, bad news gone. So permanent reversal of a closure order from Gujarat authorities, the Gujarat Pollution Control Board, on their Sarigam plant, and that's definitely a positive for them. So that's about nearly 3% up. And Wockhardt will revisit once again. Niraj spoke about it in the opening. That's an NDTV Profit exclusive. My colleague Smriti broke it late last night, and that QIP seems to have done well, about 2.5% up. So a good day today for the markets, Samina.
Yeah, it's Wockhardt is going to be interesting to see. Remember, the book was fully subscribed, on back of which you are seeing a move up on Wockhardt, 2.5% gain on that stock. Apart from that, lots of big movers in the broader markets coming in on brokerage upgrades. So you've got IRB that's topping the list with a 6% up move. Kotak Insti has upped the target price on IRB Infra, on back of which the stock is up 6%. You've also got Avenue Supermart, an upgrade coming in on that stock too, with a 2.7% up move in early minutes of trade. IOC, the brokerage has maintained its stand but said current weakness is a good opportunity to buy, on back of which, joining the rest of the OMCs, IOC trades with a gain of nearly 2%. You've also got JB, Auto Ants has been doing quite well. We've been talking about that all through this morning. JBM Auto is up 6%. You've got PFC that's up 4%. SAIL, Tata Investment Corp, for a change this morning, is not hitting lower circuit. Niraj has a smirk on his face, but the stock is up 3.5%. So taking a break, I think, the Fed came to the rescue of Tata Investment. The stock trades with a gain of 3%. Pull up Tata Chemicals, Tata Communication while we're at it. Let's see what the movement there is. Tata Chemical as well, after an 8% sell-off yesterday, seeing a 2% up move, and Tata Communication trades flat. Rico Auto is up 6%, JBM Auto is up 5%. So anything in the auto ancillary pack is actually doing really well. Motilal Oswal continues to do okay, it's up 0.5%. Electra, which sold off yesterday, is up 3%. Muthoot Finance is looking good. REC, after seeing some pressure over the last couple of days, is finally seeing a little bit of an up move this morning, 4% higher, but the counter, remember, has moved down from 485, 490 to levels of 420. So this recovery coming in after seeing weakness over the last few days. All in all, it's actually looking pretty good. On the sell side, very few losers and very small cuts. So you've got Brij that Niraj was talking about this morning. Remember, the stock was your big gainer yesterday. Some profits off the table this morning. No major cuts there, but maybe a technically consolidating after that big move yesterday. So 0.7% low on that one. Ipca Labs, Castrol India are some of the small losers, but nothing major in terms of cracks. The gains are looking good. It's a broad-based recovery after we've spent the last few days consolidating in trade. Bank Nifty also not doing too badly, performing in line with the benchmark. No outperformance there either, but remember, it's been 6 straight days of lower closes on Bank Nifty. Shrikant, you want to come in on the opening? We've got to start about 22,000. It's tiptoeing around those levels. If you have to initiate a trade right now, do you recommend it?
Yeah, say like the way it opened with a gap, there is always a chance that intraday correction, we may see a correction during the day. But in case if there is a positional view of at least next 1 week, then even at current level, it's a buy with a stop loss close to 21,800. I'm expecting minimum 22,200, 250 on the high side. So there is like 1:1 sort of risk reward ratio. But if there is any correction, then again, it will traders will get opportunity to buy more. So yes, it's a buy because I'm expecting now the market has started its pullback towards 22,250, or in the best case scenario, maybe 22,400 again. Again, if we see the overall setup of the sector-specific activity, then banks as well as IT, both these indices are reversing from their immediate lows. So again, there is also downside is limited. So broadly, we are of the view that yes, if there is somebody is really interested in buying with a positional view, yes, it's a at current level, it's a buy.
bring up Wockhardt and just see if it's sustaining that 4% uptick that it showed in the pre-open session or doing better maybe. Now 3%, but not bad considering the fact that the floor price was much lower. 2.5% higher now. Now, Nirav, there is a drug in the offing. They've done this QIP as well for reasons that at least not explained thus far. But I doubt that, aside of debt restructuring or debt payment, there could be other uses maybe for capital purposes, etc. How is Wockhardt placed fundamentally, Nirav?
Unfortunately, it's,
okay, you don't track it.
There's been very less information which has been available as far as Wockhardt is concerned, and the kind of stock movement which we have seen, the stock was at 180 levels just about a year back, and this phenomenal run which we have seen in the stock. And in December, we had this announcement that the company has completed the phase 3 clinical trial for the pneumonia-related drug. So I think after that, we've started seeing developments in the stock, and now this fundraising activity essentially for the promotional purposes of the drug, etc. So I think we would be very hesitant to take any positive call on the stock because simply because of lack of information about more developments with respect to the company.
Got it. Okay, but Shrikant, anything on the charts for Wockhardt?
Yeah, Niraj, the overall sentiment for the stock is quite bullish. Whenever there is a correction in the stock, we are seeing a good amount of buying interest in the stock, and stock manages to surpass its previous or swing high. So this time also, after hitting the levels of 500, again the stock is moving upward. And there are positive developments in the stock since last almost 1 year. And this time also, the QIP price is just 5% lower from the current price, which is again, I'm telling you, bullish for the stock. So I am expecting stock to cross its previous high of 620, 630. And eventually we are going to see the levels of 750 or maybe 800, which was its 7 years or 5 years highest level for the stock. So broadly, we are bullish on the stock based on its technical formation, and I think even at current levels, it's a buy.
Take on Wipro and what's happening with Wipro. You're seeing, of course, the Fed rate cut hope momentum across IT, but Wipro specifically because of a management change at Capco, their largest acquisition to date, which hasn't been too hot so far in terms of its performance, has seen a pretty good morning. Nirav, I'm wondering if you're tracking this and what you feel about Wipro right now?
Yeah, I think the recent changes definitely augur well for the company. So we can expect a good upside from the current levels for Wipro.
Nirav, we'll let you go on that note. Thanks so much for taking the time out and being with us. Shrikant, Chouhan, very quickly before we let you go, you've given us your top ideas, but after open, 10 minutes into open, you've seen some of the price charts as well. One stock to monitor for the day.
I think in that space, we like BHEL, Bharat Heavy Electricals, which is around 230. The stock opened up with a gap, and again, it has completed its immediate corrective pattern. So based on its formation, on immediate basis, we can see the levels of at least 240 to 42. So here also we have a buy call with a stop loss at 225 on the downside.
Shrikant, we'll leave it at that. Thanks so much for talking to us today. I really appreciate your time. Just before we hit that break, it's important to highlight this note that Morgan Stanley's come out with, wherein they say that it is India's decade. So the first thing is it's an emerging market note wherein they are saying that multipolar world trends are supporting FDI and portfolio flows, while positive demographics and success in macro stability, I think, underpins some of the EMs, and particularly for India, a strong capex and profit outlook. They say we see a secular trend towards sustained superior USD EPS growth versus EM over the cycle, with a young demographic profile supporting equity inflows. This is a very important point, by the way. They are saying that valuations for India are at a premium, but in their view, this is warranted by a superior EPS CAGR that India has shown and will see. They've highlighted Q3 and said it's a 23% CAGR, if I'm not wrong, will come in. Maybe it will come in. But they're effectively highlighting that even if you look at the recency bias, or if you have a recency bias, the EPS performance thus far has been northwards of 20-23%, and therefore the valuation premium that India is demanding is strong. So net viewers, what they're saying is that they like Japan and India within the Asian pack as amongst the most important pockets to bet on. On that piece of news, let's slip into a quick break. We are back with a conversation with Shyam Metallics. Metals are up, so talk about that. And then a bit later on, talk about the oil marketing companies.
Welcome. We have with us a very special guest. Brij Bhushan Agarwal of Shyam Metallics and Energy joins in. Remember, this company has been on the radar for a lot of the big private investors and also caught the fancy of retail investors. Mr. Agarwal joins us to talk to us about what the outlook looks like, how's business, and of course, the big plans locally and globally. Mr. Agarwal, thank you. Thank you for joining us this morning. I'm going to start with the most recent news flow on Shyam Metallics, where we had the business update from you, where your sales volumes have actually looked really good. So there's been a sharp rise in sales volumes, but realizations are actually down across all segments. You want to elaborate on that and tell us why?
Yeah, very good morning. And as your first thought process about the business, it's very exciting. And I would say there's no complaint with the kind of changes what we are seeing in the economic policy, the kind India is shining, the business is doing very well. And related to the sales realization, yes, this is going down because the major pricing is being controlled by the international price, and we are seeing there is a steep fall in the raw material. So there is some kind of a correction which is happening in the finished steel on the product side. So it's nothing. It's maybe 30, 35 days or 40 days carryover of the high price of inventory which affect. But I would say from the data point of view or from the point of view, the overall margin, it is pretty decent.
And Mr. Agarwal, just looking ahead, right, in the next couple of months or couple of quarters, so a little more out there, would realization stay at these levels, or we could expect an improvement as early as next month?
See, I see now we are at the election quarter. I don't see the realization should further improve because, there will be a lot of concern on the, from the supply side and a lot of concern on the election quarter, the general issue will be there. So, but the margins are going to remain, and I also don't see any kind of a steep correction in the pricing as well.
Okay, so no steep correction anticipated, and margins will maintain because those have also gone up quite substantially quarter on quarter. I'm going to be very brave and ask you, any upside risk on margins going into the next few quarters? And also you did talk about how it's election time. Usually at this time, business does slow down until and of course elections are done with and policy continuity is in place. Fair assumption for me to make that the next quarter potentially could be a little more subdued in terms of reporting?
See, business is doing pretty decent, and I don't see a major changes in the next quarter as well. Because, we have to understand, during the election time, there's a lot of disruption in the logistics sides. And, the consumption of the steel also depends on the people, down the street, the workers, the laborers. So that is only a kind of a hitch. Otherwise, everything is good. The order booking is very good. And we are seeing a very good demand, extremely good demand in the domestic market.
Can you quantify the kind of growth you're expecting on your top line, sir?
For this year?
Yes.
Oh my God. So whatever we had, stated before, whatever we have, it's almost going to be in the same line. We should be doing in the range of around 8 to 9% this year.
And that, of course, is going to be consistent. You don't anticipate any sort of upside on that, huh?
So this coming year is going to be a big time change because a lot of capex, what we did, almost 4,500 crores capex we did in more than 2 years from now. So most of the plant will be commissioned in the coming year. So coming year is going to have a good steep, hike on the volume as well on the revenue side.
We talked about how realizations were slightly weaker, but if I look at your margins year on year, there's an 85% increase, and quarter on quarter also is an improvement. Further improvement is expected, Mr. Agarwal. Any sort of ballpark guidance in terms of what margin growth can we expect from your company?
Margins are, we are focusing more on the B2C market, and whatever new expansions we have done, it is majorly either the backward integration or the forward integration. So forward integration is enhancing our margins and creating more value to the consumer directly. So I think we have done in last 2 years, we have done a major issues. We will not see that kind of growth what we have seen in the margins from B2C. But on an average, you can say we should be doing around 12 to 15%.
Okay, so 12 to 15% is the range that you're looking at for the rest of the year. I want to talk to you about your greenfield expansion project for cold rolling mill in Jamuria in West Bengal. I believe that's got an approval for PLI benefits. What is the quantum of that, sir?
We'll be producing around close to 4 lakh ton, and which we plan to commission this plant middle of this year.
And so the capacity will come on stream as early as mid-year?
No, third quarter, since we'll be commissioning in the second quarter. So from the third quarter, it should get regularized. And by end of last quarter, we expect that, we should be able to streamline to the extent of around 80-90%.
Right, and how is exports looking right now? You do export to 7 countries from what I understand. Big conversations happening outside India as well. And how much does exports contribute to your top line, and what are the margins there, sir?
So presently, I would not say that the export market is very encouraging, but it's not bad as well. Like earlier, we were doing close to around 18 to 19%, but this year, I think we should be doing around 10 to 11%. So there is a steep, the reduction in the international businesses because of the geopolitical situations and a lot of issues which is happening around the world.
Right. We talked about infrastructure, we talked about real estate. What I forgot to ask you was EV. I mean, that's another upcoming space, and there's so much of conversation around that. Are you in talks with partners, collaborators for the EV business manufacturing in India? Can we expect anything from Shyam Metallics on that front?
Very interesting question, but I will not be able to discuss in detail, but I can just brief you. Like all the top battery manufacturers, we are in touch with them. We have done some kind of a confidential agreement on the product development and long-term supply. So this is this is one of a very unique product of Shyam Metallic, what we have been always talking, and we see we will have a good presence in the time to come in the EV battery and all the battery, plant which has come up in the country under the PLI scheme, like they've been, regulated to buy more than 70%, 65 to 70% of the stuff from India. So we will have a good value,
How significant can the contribution of this be to your top line over the next 3 to 5 years? And I know it's early days, but internally, what sort of projections are you working with? And I'm not talking about the next few quarters now. A little more long term, the next 3 to 5 years, how significant can this be to your top line?
See, this is very interesting. In aluminium, we are doing a backward integration. Also, we are putting up a green cycle, green recycle aluminium plant. So the present battery foil raw material also we will be making as a green alloy, which is also going to add a lot of value to our business. So this is also going to be one of a very unique product and is going to be a backward and forward integration. Also, we are planning to, enhance the capacity in the battery foil. So once we are through with our board approvals and all things, we'll be declaring it officially.
I want to ask you very quickly about the Mittal Corp as well, which you acquired towards the end of last year. You usually land up doing a lot of, ramping up at that unit. You want to tell me what is happening there? Any additional capex in this company that you've acquired? And if yes, what can we expect in terms of numbers over the next couple of quarters?
First of all, I would like to brief you. Mittal Corp was a very strategic buyout for us. Number one, the raw material, the ingredient, what we make, what is used to make in stainless steel is a forward and backward integration of our existing plant. We have taken over the Mittal Corp this year, and today we are operating, this year we'll be operating at around, say, 30 to 40%. Coming year, we expect that we should be able to ramp up to around 70 to 80%. To your next question, we are going with a high value business in the stainless steel. As we are going into the stainless steel wires, and we are planning to get into the engineering applications like stainless steel bars and special sections of the stainless steel, which has a huge international market, and India as well is developing a lot. Also, we are focusing on some railway segment in our stainless steel business. So this is a good plan. And next 2 years, I feel we should be able to put everything, on the street, and we can very well enhance extremely good value in our stainless steel business.
Right. Just going out maybe 1 to 2 years from now, there are a couple of brokerages who believe that contribution from additional revenue streams such as color-coated steel, pig iron and downstream steel products could actually lift your EBITDA quite significantly. Maybe FY26 really. Is that a possibility? And if yes, what is your FY26 EBITDA target?
Oh, see, we can't discuss all these things, but yes, I see since we are commissioning the major expansion this middle of this year, 26 is going to be a very interesting year, and definitely our investors will see a huge exponential, in the terms of revenue, and yes, with the top line increasing, the bottom line also will increase. And the most beautiful thing, if you see, it's all backward and forward integration from B2C and value addition. So we will see a very different Apple over and above what we are seeing now in the company. And it will really have a good edge on the specialty product side, specialty alloy side, aluminum side, stainless steel side. So if you see, this is going to be a only company in the country with having so much of unique apples and portfolio in the metal space.
Right. Also, you did launch a QIP, right, to the tune of 1,380 crores. So your net cash position looks very healthy at this stage. Any plans to sort of, use that? I mean, what is the cash utilization plan that you have in mind? Because this is significant.
So, we have a good treasury, but this QIP money was, utilized to reduce our working capital and, other short term. So in the time to come, since we have a good treasury also and we see a decent EBITDA, so new capex plans are going on. So once we are done with our internal review and board and all, we'll definitely would love to share with you.
Sensitive are your margins to coal prices? Because, I mean, that also looks very volatile. I know in Jan that was much higher. We look at them now, coal prices have reduced. Any measures to hedge that? Because I know that's a key, it's a key sort of input cost that goes in for you.
See, coal is a very important cost because, we have a huge capacity of power, and in steel making, as I have rightly said, the most interesting thing in our business is like our dependency on the Indian coal. So we are seeing there is a huge correction in the coal prices. So we will definitely be beneficial. And in the time to come also, we are seeing the capacity in the coal India and the supply of coal in our country is growing exponentially. So I don't see any kind of a major correction further in the coal prices, because I think today whatever prices are there, it's almost at the very, very reasonable, bottom level. And in the time to come also for next 1 or 2 years, at least for 2 years, I don't see there's going to be a major change in the coal prices.
So you're comfortable at these levels, sir? Is that right?
I feel so, because, we are totally dependent on the coal India production and the...
Yeah. So if there is operational efficiency, there is an upside risk to your margins then. That's a fair assumption if coal prices stays at these levels.
Yeah, but whenever the coal prices goes up, the prices of the metal also goes up. So there are sometimes the risk, but we say that it's very sustainable and very, very consistent margin business, because maybe for 30 days or 60 days the cycle changes, but majorly it doesn't have a big impact.
Okay. Also, very lastly, and I have to ask you this, any more acquisition on the cards? Because at the pace you're growing, and like you said, the demand is not going to stop anytime soon. You're venturing into the EV business. There are PLI benefits that you're going to avail, and your books are quite healthy. Any more acquisitions, anything that you're currently eyeing, brownfield projects on the anvil?
So presently not very serious on the table, but yes, our media team is evaluating a lot of projects, and we are seeing if there is any strategic value what we can add to the investors and to the organization, then only we go more deeper. But since you are seeing which we have a lot of capex and a lot of expansion for next 2 years, what we have already declared. So not very, very serious, but yes, I would say we are looking for a few acquisitions, but not majorly on the larger side, mostly on the strategy side. And we are focusing more on our brownfield expansion.
And no risk to delay in commissioning, right, at any of these capacities?
No, not at all.
Okay, lovely. Thank you very much, Agarwal. Good luck with business. It's looking good for you. Enjoy this, and we'll hopefully see you soon. Welcome back. You're watching India Market Open. It's turning out to be a pretty solid day of trade for most markets across the world. India is no different, holding on to 22,000 for now. But it wouldn't be a surprise if we see some profit taking in the second half of trade. Broad-based rally largely. OMCs, they were gaining yesterday, they're gaining today, but it's been so news heavy in the last couple of months for the sector. Probal Sen, Senior Research Analyst, Oil and Gas Sector for ICICI Securities now joins in. Probal, hi, good morning. When we spoke about 6-7 weeks ago, we talked about how it was getting difficult to go back to the room and, review your target price on these OMCs because the surge was unprecedented almost. Fast forward 6 weeks, it seems like these OMCs have been on a downward spiral pretty much, today being an exception. Where do things stand right now? Looking good, looking bad? Is OMC a buy at these prices?
I would say that probably, people will calibrate their entry levels at this point of time. Certainly the reduction in fuel prices by 2 rupees came at just the time that after a prolonged period of softness, the crude and product prices both internationally have started to actually rise up again. So to that extent, obviously the marketing margins, for retail fuel certainly are likely to see a downward pressure for the next couple of months. Our core assumption, of course, remains that, given the timing of the cut, we would not really build in any fuel price increases till the election is over. Post which there could probably be a, more normative period of margins that once again begins. So to that extent, one would say that for the next few months, the stock may move sideways. Yes, there could be a uptick here and there, but my sense is that for sustained outperformance, one will probably have to look at a 6 to 12 month period and specifically the closure of the election results to sort of see a normalization in terms of retail margins, which in any ways obviously is a very important factor. The other aspect is that if you look at the way that GRMs have behaved, Singapore GRMs have also softened a bit back to about $6.5 levels in the last couple of weeks. While we do expect that the market will get tighter, and frankly, all data that we look at in terms of demand growth for crude, in terms of economic growth forecasts being upgraded, and supply continuing to remain restricted specifically from OPEC Plus suggests that even refining margins could actually see a little bit of an uptake. But as of now, given that Russian crude is becoming increasingly difficult to sort of, procure, given the kind of sanctions on specific vessels and shipping lines that can transport the crude, issues related to payment, if you put that together, the kind of clear advantage that Indian refiners enjoyed over most of FY24 with respect to Singapore benchmarks, that may come off a bit. So I would say that I'm a little bit cautious from a near-term perspective, but our long-term conviction, specifically on HPCL, I think completely stays unchanged. Our sense is that FY25 and 26 will probably see earnings upgrades on the street. We remain about 20 to 25% ahead of street estimates if I look at my consolidated EPS estimates. And that is predicated on a very simple logic that their refining throughput alone will probably expand by about 30% in 25 through the Vizag refinery commissioning. And from a consolidated level, you would add 9 million tons of effective capacity from Rajasthan sometime in FY26. And when you add to that our conviction that normalized retail margins will persist at about 3 rupees a litre over 25 and 26, I really think that the stock can continue to outperform from a 12 to 18 month perspective.
Probal, your EPS estimates are higher and fundamentally the stocks should do well. Would an overhang of higher crude or government intervention keep them subdued, or do you think this is just the great time and the right time to go out and buy them?
As I said, I think the fact is that the extent of the price cuts were fairly reasonable if you really look at it.
Probal, what if there is more that were to come? Could that overhang keep them subdued?
Yes, absolutely. If there are more price cuts that are sort of pushed through, given that diesel is already at just about break-even EBITDA level as far as we are concerned at current prices, absolutely, we would be forced to sort of revise our core assumptions. does not look to be likely because the window for probably promoter-driven actions in fuels is gone since the election dates and schedule has already been announced and the code of conduct sort of comes into play. And my sense very clearly is once the election is done, you would probably have a much more normal course of business that should return as far as retail fuel pricing is concerned.
Well,
anything changes.
Sure, these are local factors, and elections clearly is the big event. I don't think we are talking about this or worrying about this enough, and I feel like crude could be that ugly surprise that could be thrown at us in the next couple of months. If crude does go out to trade about $90 a barrel, if fuel prices remain where they are, a fuel price cut cannot be coming our way, even post-elections. In that case, what happens to these OMCs? Because on one hand, you've got lower crude price, you've got crude prices about $90 a barrel, which is highly uncomfortable, I'd imagine, right? So is this something you're watching out for too?
See, fundamentally, if you look at where crude is today versus where marketing margins are today, what you are talking about in terms of crude getting to about 90 odd levels, that translates into an additional $4 to $5 of prices. Let me assume that international product prices also rise in the same proportion. Every dollar increase without a change in corresponding prices translates into a 52 to 53 paisa per litre hit on the margins. So effectively, yes, if crude prices were to rise and continue to stay at, let's say, $90 levels, and there is no pricing action that is allowed, even post the elections, and I keep qualifying that. I'm anyway saying that till June, in any case, there is a hit. So therefore, first quarter FY25 earnings could obviously be under pressure, given the trends that we are seeing. But post that, if price increases are not allowed and no action is taken, then obviously, there is a hit. And both, diesel anyways is at close to EBITDA levels right now. Petrol, which has a little bit of a cushion, that could also see that cushion go away. And that is obviously a significant 15 to 18% hit on earnings that can happen. Having said that, the kind of strength that you're talking about can also be accompanied by a corresponding improvement in refining margins. And therefore, it's important to remember the equation that, we tend to sort of look at, that every rupee per litre cut or increase in marketing margin has to be met by anywhere between $1.3 a barrel of GRMs in the case of, let's say, IOCL, to about $2.2 a barrel of GRMs in the case of HPCL, to keep gross margins at the same level. And that's why the expansion of Vizag refinery is also important, because by FY25, that number of 2.4, which is prohibitive today, will probably come down to somewhere under 2 and creates a little bit more stability, as long as the crude increase is also accompanied by a corresponding increase in refining margins, which helps offset the hit from marketing. All of this with the caveat that we continue to believe that the regulatory interference and regulatory intervention in fuel pricing will definitely go away post the elections. Therefore, if prices continue to stay high, there would be an upward pricing action that can happen in petrol and diesel.
Got it. Probal, thanks for putting that into perspective. Really, really appreciate your time this morning. Watch out for OMCs. Probal Sen believes it's a pocket that you should seriously consider with all the assumptions around it. It's a wrap on India Market Open. Thanks for tuning in. But up next is Talking Points, so stay tuned.